Hello traders and welcome to NOFT's weekly trade highlight. In a moment, you'll see us recreate one of the best trades of the week with NOFT's order flow and market profiling tools along with detailed trade commentary with NOFT Trade Tactics. Our weekly trade highlight is brought to you by one of our own NOFT traders who, in between assisting traders in taking the next step in their careers, provides weekly and daily guidance in our live trading room every single day. Before we get into this week's highlighted trade, we need to remind you that trading does carry significant risk, and all information in this video is just provided for educational purposes only and is not an offer or recommendation to trade futures, stocks, options, or forex. From everyone here at NOFT, good hunting out there and happy trading. Hello traders, for this week's trade highlight, we're going to go ahead and highlight the trade on March 22nd of this week. So if you want to follow along with your charts, I believe that's going to be this low. Actually this low right here on March 22nd. All right, this is going to be the low right around 26.64.75. All right, and this here it is on the low. I believe this one right here. Yep, this is our volume composite here, and it's going to be our low right through there. All right, on a 30-minute chart to give you a better idea of where we are. That's this low right through here. All right, so let's go ahead and jump into the chart here. So this is the trade that we're going to take a look at on order flow. All right, so just to give you an idea of what you're seeing here on the charts, these blue lines here, these are called volume rejection levels. These are levels that are found by our head trader and linked right to your computer. So if you want to know exactly where our head trader is trading, as soon as and you are linked, you are hooked up and linked. As soon as they move a level on their chart, it'll automatically move on your chart within a minute. These are pretty static. They don't change very often because they are looking for low volume areas in the market on higher time frames. But if they do move, you will see that here on the chart. So let's go ahead and identify the profile over here. This is called the volume at price, and this calculates volume on a daily basis. This pinkish area here is your value area. This is the area we typically don't want to trade, but we will target. And this blue area is indicating a low value area. You'll see this on the top. Squeeze this a little bit tighter. So this is a high value area and a low value area. All right, and this is just looking at the this is taking volume into account and giving us an idea of where 70% of the transactions are occurring right here in the middle versus where a standard deviation outside of that, where the low value areas are. Taking a look at order flow, here we have the footprint. On the right side, we have all the buyers and the executed orders here coming into the market, and the left side, we have the sellers and executed orders coming into the market here as well. So we get a clear picture. We're taking pretty much a candlestick and just blowing it up and just seeing exactly what's going on inside that candlestick. These blue numbers here indicate buyer aggression when buyers are overwhelmingly coming into the market. So you'll see 500 buyers here, or 405. You see 136 to 136 sellers on this side in the red numbers. So you see a lot of blue and red numbers coming into the market. These green boxes here, they just indicate when as price is moving down. This is actually kind of more of a reversal signal. But when you see price moving down, that's on the left side, this green box, that sellers are coming out of the market, indicating a buying opportunity. When you see these red boxes, that means buyers are coming out of the market, indicates a possible selling opportunity. So these are signals to take a look at in the market. But for today, oh, and one more thing, these gray boxes here in the middle, as you can see throughout here, this is telling us where the highest volume point within the candle took place. So at what price point did the most volume in this candle take place? When it is positioned properly, the COT is in the bottom third of a candle. That's what this is, the commitment of traders. This means responsive buying, and when it is in the top third, as you can see here, indicates responsive selling. All right. So let's go ahead and take a look at this candle. So you can see here we came down to this trade location, made a really nice low here, and could have certainly argued for a trade here. However, what I liked about this trade and why we're highlighting it for this week is that it's actually this double bottom. Right? We really like to trade price patterns here, but this is a really nice double bottom and a higher low, indicating possible strength here in the market. Now, You can see the low put in here, and it's a pretty heavy day here to the downside. Rebounded here, came right down and made another double bottom. You take a double bottom, you're below value, you're at a trade location, and you're getting buyers responding here. You got the ingredients for a pretty decent trade here. So as the price is coming down, we get back to this trade location, double bottom. You see, actually, if you read the footprint, you see 1,023 sellers, 998, 696, and 11 sellers right down here at the bottom of the market. All right, not very aggressive. You can actually see sellers coming out of the market as price continues to move lower. On the flip side, you actually have buyers, just 395 or 394 orders coming in on the buy side. You can see buyer aggression at the very bottom of this candle. So you got, again, the double bottom, trade location, below value, sellers coming out, and buyers getting aggressive. You can see all that right here in this candle. You go ahead and take this trade. And we had a few traders to actually take this trade, and they covered their trade right through here. And what you saw is an exhaustion bar on the next bar. An exhaustion bar is just when there's an overwhelming amount of buying taking place, as indicated with these 6 buying balances all through here. An overwhelming amount of buying taking place, and then as which can't be maintained, and price continues to move higher. You have a red box here, you have a couple red boxes up here indicating that buyers are starting to come out of this market as price is moving higher. You're getting sellers getting aggressive here at the top of the market. That COT that we talked about earlier is moving higher in the candle. So this was actually a pretty great place for most traders to cover, which we had quite a few do. However, the traders that were actually able just to move their stop up here a little bit and hold on to their trade, at least bring it down to a break-even trade or break-even stop here. If they were able to hold on, they got paid pretty well. You had another exhaustion bar. There's a ton of buying coming into this bar here. You got to this level right here in the value area. This dotted line right through here is called the POC, or the point of control. This is where the highest volume took place here in the market, and these are great targets. A lot of volume took place, a lot of transactions took place, and when you target these POCs or these high volume areas, they're great places to go ahead and take profit. So as we get there, once again, you have another exhaustion bar. This yellow block here at the top is called a trap, where there's an overwhelming amount of buying taking place at the very top of the candle. But you got something here that you don't normally see with candlesticks, is that you actually have a green bar here, but you have this negative 318. This adds up all the orders in the bar and adds all the buy orders, subtracts all the sell orders, and gives you a total sum of the orders in the bar. And this is telling you that there's a green bar, but there's actually a net selling of 318 orders. So sellers are actually dominating this bar. You get to the next bar, once again, sellers are dominating this bar again. You're at another trade location. You see sellers coming in here in a big way, this red number. You see negative delta here saying sellers are dominating this bar. And you're right at a POC. All right, so this is where I think we all cashed out here at this point. This is a great looking trade on the day. He hit the target, and this trade actually went up a little bit higher before starting to roll back over here. So he left a few ticks on the table, but overall that was a great place to go ahead and take profit. So I hope you enjoyed our trade of the week. Please visit us at www.noft-traders.com. And until next week, good hunting out there and happy trading.